Hello everyone, welcome back to Decode Indian Markets. Today we are talking about the most powerful tool in trading, not charts, not indicators, but your own mind. More than 80% of the traders lose money, not because of bad strategies, but because of weak psychology. So today I'm going to break down emotional discipline, common biases, and how to build a rock solid trading mindset. Let's begin. So, what is trading psychology? See, trading psychology is the mental and emotional framework behind every decision you make in the market. The market does not test your strategy, it tests your patience, it tests your discipline, it tests your greed, fear, your self control. A trader with strong psychology and an average strategy will always outperform a trader with weak mindset and a perfect strategy. Now, let's see what are the two main emotions which actually destroy traders. The first emotion is greed, and the next emotion is fear. See, you have a fear of exiting too early, hesitating to enter, doubting your plan, and we have a greed for over trading. So once we have some profit, then we overtrade. We get confident that we'll make more profit, and if we lose, then we overtrade to get that back, which is what we call as revenge trading, adding quantity without logic. So that is what we get greedy and we fear. Now, how how you can build emotional discipline, or what emotional discipline means, right? So that is nothing but we should be having a plan and we should stick to that plan whatever happens. Whatever happens, if we lose, we win, but we have to follow the plan. And if you suffer losses, see, nobody in the world, no, even the best traders in the stock market, they also suffer losses, but they know how much they can lose every day, every month. So they have a fixed plan which determines how much they can lose and how much they can profit. So they do not lose more than what is expected. So they have the loss limited. That's why they are able to accept losses, right? And they, after taking the trade, they use stop loss. So there are many people in the market, still there are many people who do not use stop loss and they do not stick to the plan. So as soon as you take the trade, you have to put your stop loss, because you never know where the market goes. Of course you can do your technical analysis and do your fundamental analysis. You can guess, you can make your guesswork like 70% probability, or you can have a high probability decision, but at the end you should have a stop loss if any time the market goes against you. And you have to wait for your setup. See, you will not get your set. So if you're trading is if you're trading intraday, then you will not get your setup every 5 minutes, every 15 minutes, or every 1 hour. Maybe you are getting your setup in the last 1 hour of the market, right? And if you're trading, if you are into swing trading, then you might not get setup every day. Maybe you get a setup after a week, right? So you have to wait patiently for your setup, and you have to, after taking the trade, putting the stop loss, you just need to detach from the outcome. You don't have to worry about the outcome, because you already know how much you can lose from this trade, right? If the stop loss is hit, fine. If it makes profit, fine. So you need to detach yourself from the outcome. Now, how to build a powerful trading mindset, right? So for this one, to succeed in the markets, you need to structure routine, and you need to have an emotional awareness. Have a clear plan. Have a clear plan means you should know your entry, exit, stop loss, quantity. All must be decided before the trade. Let me repeat that. Entry, exit, stop loss, and quantity all must be decided before the trade, right? Then risk management. Never risk more than 1 to 2% of your total capital on a single trade. So make this a rule, write it down, or just remember this. Never risk more than 1 to 2% of your total capital on a single trade. Journaling. Journaling is writing down why you took the trade, why you exited, and how you felt. This single habit can transform your accuracy. Then, patience. Great traders wait more than they trade. Not every candle movement is an opportunity, right? You should learn to have patience, and you have to wait quietly for your setup and then take the trade. Reduce screen time. Overwatching the chart increases emotions and reduces clarity. Trade less, think more. So you should actually, yeah, this is one of the important reasons. Like overwatching the chart. So you have to stop watching the chart. You have to stop watching the chart. That actually gives you mind. That actually gives your mind a break, which you needed, right? Trade less and think more. And you need to know how to accept losses, that we already talked about. Losses are not failure. Okay, remember this thing. Losses are not failure, they are the cost of operating in the market. Manage them, don't fear them. They are the cost of operating in the market. Manage them, don't fear them. Now, if you found this video helpful, make sure you like the video and subscribe to Decode Indian Markets for more trading knowledge. Stay disciplined, stay consistent, and remember, the market rewards the patient, not the emotional. See you in the next video.